In this video, we will be talking about our investment strategy, biggest winners and losers, as well as what we have learned through this trading game. We chose to diversify our portfolio by investing in various industries. We use a mixture of fundamental and technical analysis to make our investment decisions. We use a top-down approach for our fundamental analysis, and the only exception to this was creative. Elliott wave theory was used to analyze the market cycles of stocks. However, due to its inaccuracy, we switched to CAPM for evaluation from 21st Feb onwards. CAPM was used to determine whether the current price of the stock was under or overpriced. An underpriced stock will be long and an overpriced stock will be short sold. Bollinger Band was used for creative technology. By looking at breakouts and the movement of the bands, we analyzed and predicted the growth of the stock. The Chinese New Year anomaly was one of our considerations. Returns during this period are usually higher. We will now be talking about our biggest winners and losers. DBS, Creative, and Noble are our biggest winners, while we incurred the most losses in our Bestworld and SETS investments. DBS came in third place. Fundamental factors for the finance industry includes MAS publishing an industry transformation map, which foresees a 4.3% increase in industry GDP growth, and as such, we decided to enter into the finance industry. DBS was chosen over its competitors as it has been Singapore's most valuable brand for 5 years in a row. To decide on when was the right time to enter, we used Elliott waves. Can be seen from the graph, we discovered a dominant uptrend and entered in a wave A, which is a corrective downward trend, and thus an ideal time to buy a stock. We were expecting an uptrend after the wave C, and our decision to sell came when CAPM showed us an expected price of 29.02 on 22nd Feb, when the current market price was 29.12. This made it ideal for us to sell. Moving on to second place, we have Noble Group Limited. The shrinking of the General Electric company caused a decline due to the lack of confidence in the industry, as investors feel that most CEOs do not have the required skill sets to run a conglomerate. Noble Group has a restructuring plan to restore its shareholders' equity and its market-leading position, resulting in a 6.6 billion loss. This led to our decision to short-sell Noble stock as we expected prices to fall. On 22nd Feb, the expected share price was 18 cents when the market price was 19 cents. As such, we decided to short sell the overpriced stock. We proceeded to buy back the stock on 1st March when expected share price was 17 cents and market price was 16 cents. This provided us with a $12,000 profit. Our biggest winner is Creative Technology. The release of the Super X5 headphones doubled the share price of Creative in a day, and this caught our attention. CAPM was used initially to calculate expected price. However, the regression resulted in a low R-square of 19%, which made the model statistically insignificant. Thus, we decided to use another model. Using the Bollinger Band analysis on 28 Feb, with a hike in share prices, there was a breakthrough in the upper band. We were afraid that the bubble would burst and thus decided to take profit at 6.6K. On 5th March, realizing that the share price was still riding the upper band, we entered again. However, a note of caution was issued by Business Times and we decided to sell and lock in our profits of 20,000.
Now we will be talking about our biggest losers. Our second biggest loss in this trading game is SETS Limited. 80% of in-flight catering in Changi Airport is handled by SETS, which also contributes to a bulk of the revenue, which recently achieved an all-time high record of flights. We believe that this would have a positive effect on SETS' third quarter earnings, which was due to be released soon. Elliott Wave supported our decision to buy as we entered in Wave C of a downwards trend, and we expected it to increase when the next upward trend started. However, Elliott Waves did not hold true, and the share price of SETS continued to drop. We proceeded to sell off our investment on 27 Feb as our CAPM calculations showed that the expected share price on that day was $5.04, while the market price was $5.22. We sold it off to minimize our losses to 4.3K. Bestworld was our worst investment. Maybank is one of Bestworld's substantial shareholders, which was one of the fundamental factors leading to our investment decision. Their revenue has also been steadily increasing and plans to expand made them attractive. Based on Elliott Waves, we entered at Wave 3 of a downwards trend at $1.26, predicting that the stock price would go up after Wave 5. We put a stop loss of $1.20 as we were worried that the annual report would cause stock prices to fall. However, a sell down from bearish investors triggered our stop loss, which left us with a 5.2K loss. Through this trading game, we discovered that Elliott Waves is inconsistent, causing us to incur more loss than profit. Switching to CAPM improved our buy-sell decisions and increased our profits. Overall, we realized that CAPM is a more superior technical analysis.
Created using Powtoon.